Well, it looks like the Republicans are getting their wish. Let's reduce all workers in America down to minimum wage. Scranton, Pennsylvania. The mayor there, Chris Doherty, says we're out of money. So we're going to pay the least we can by federal law, which is the minimum wage, $7.25 an hour, to our firefighters and our cops. And this has to be making people like Peter Ferrara, senior fellow with the Carleson Center for Public Policy, theccpp.org. Very happy. Peter, welcome back to the program.
Glad to be here.
Are you not excited that firefighters and cops are only making $7.25 an hour?
I wrote a whole book arguing that I want all blue-collar workers to be millionaires. So read the book.
So how much do you think firefighters should be paid?
As much as possible.
And
I want them to be able to have personal savings and investment accounts that they could put what they're paying in payroll taxes in those accounts over a lifetime. Average income to earn a couple of standard long-term market return would retire as millionaires.
So you oppose the efforts of Republicans in the House of Representatives and the Senate to block funding to the states. The Republicans successfully blocked this year and last funding to the states that would have prevented Scranton from going broke. You're opposed to these Republican efforts?
No, that's silly. I don't want responsible states and local governments to have to bail out irresponsible states and local governments. So we're not doing a Greek-style bailout. If Illinois can't manage its spending, or California's, which is completely nuts, they have to deal with it. I don't want them to tax people in Texas and Florida and Indiana and other states where they're getting control of their...
So you think Scranton, Pennsylvania should raise their own damn taxes?
If they want the runaway spending, then they need to raise their own taxes.
So paying firefighters more than $7.25 an hour is runaway spending?
No. Like I said, I want them to be paid as much as possible. Maybe they should be more responsible with their other spending.
Yeah. So Scranton should do what?
Scranton should cut their other spending and pay their firefighters and policemen more.
Yeah. Well, it doesn't look like they have the option of doing that. It looks like everything is broke. I mean, this is the disaster that the banksters brought us, and with this horrible crash in 2008, and you don't think that we the people collectively should help out any of us who got caught by that?
No, I'm in favor of a robust safety net that will be better and more effective than what we have today. And the crash in 2008 was caused by the government, not by the so-called banksters. That was caused by government overregulation and by loose Federal Reserve monetary policy. So
then why is it from 1935 when Glass-Steagall was passed until 2000, we had no bank panics? At 2000 comes along, Phil Gramm pushes through Gramm-Leach-Bliley, which repeals Glass-Steagall. Suddenly you've got all these giant banks, and they can all gamble with your and my money, and they're starting to sell cities like Scranton all these exploding forms of investments that crashed with the market. And we had never, from the founding of this republic until 1935, we'd never gone more than 15 years without a bank panic. We had no bank panics from 1935 until 2007. You think that was because of regulations?
The repeal of Glass-Steagall eased the financial crisis of 2008 because it enabled commercial bank holding companies to buy failing investment banks. And
it allowed monopolies.
Can I finish my point, please? Some firms that would have failed, in fact, survived because they were bought out by commercial bank holding companies. So it reduced the crisis.
So let me get this straight. When a city fails for whatever reason, they should simply fail, to hell with them. But when a bank fails, then a larger bank should be able to bail them out.
If the larger bank wants to bail them out, wants to buy them, that's up to the larger bank. That has nothing to do with the government or the taxpayers. I'm a Tea Party advocate. I'm opposed to any bailout of any bank or financial institution by the taxpayers, period.
Okay, I follow your logic. And then the end point of that logic is what happens when all the banks get bought up by one giant bank, and we're all bowing at the Bank of America.
Well, that's what you have the antitrust laws for. If you had one bank in the entire country, that would seem like a monopoly. But if you had it's government regulation that's forcing the closing of the smaller banks today and forcing the consolidation.
Well, we have 6 banks right now that are controlling assets that are equal to 65% of our GDP. You think that's healthy?
No, I don't think that's healthy. I think that that's due to excessive government regulation that's driving small banks out of business because they can't handle the costs as well as bigger banks. When the government imposes these costs, the bigger banks have more customers to spread it over, but the smaller banks do not. So they're driving them out of business. Moreover, nothing in the financial crisis of 2008 was caused by commercial banks engaging in securities business. They were not, because even with the repeal of Glass-Steagall, a commercial bank could not engage in IPOs or
well, the other half of it was what Phil Gramm also brought us, because his wife Wendy was on the board of Enron, which was the Commodities Futures Modernization Act, which said that no longer do commodities have to be traded on public and transparent exchanges. They can now be traded in secret in these gray areas, in these dark exchanges, and the pool of phony baloney money, these credit default swaps and whatnot, grew from zero in 1999 to somewhere between $700 and $900 trillion.
Credit default swaps reduce risk because it allows some companies to sell their risk to others, and that's what that's all about. And that's why that was highly desirable. That was
they've been around forever when you actually are a player in the market. If you're actually an airline who's going to use oil, or if you're actually an oil company that's producing oil, it makes perfect sense. I'm with you, Peter. But what the Commodity Futures Modernization Act did was two things. One, it said that you can reduce risk on things that aren't inherently risky, right? That aren't commodities. In other words, they can be traded. You can create derivatives on them. And two, there's no oversight over these things. And
they're transferring interest rate risk, things like and other forms of market risk when they buy and sell it, or else they wouldn't buy and sell it.
And look how well that worked out for us. The banksters got off many of them are billionaires still to this day, and the rest of us, I mean, we've seen a $7 trillion loss of net worth in this country.
That was the fallout of the subprime mortgage crisis that was forced on us by Bill Clinton's overregulation and by the Fed's loose, weak, cheap dollar monetary policy, which further pumped up the housing bubble. That cheap dollar monetary policy was due to Bush and his poor Secretary of Treasury, and the bank overregulation, the looting of the banks that resulted from that overregulation. That was Bill Clinton. So both parties share the responsibility for it.
You know, I'm not disagreeing with you that loose monetary policy had some role in this. Alan Greenspan and his libertarian philosophy really did wreak havoc on this nation. That said, though,
is hard money.
It was
not loose money.
It was the deregulation of the banks that brought about this crash.
Libertarians are for the gold standard, so they are not for a loose monetary policy. And deregulation only eased the crisis.
I don't think most libertarians understand the gold standard, Peter.
It was regulation forcing the banks to do the subprime mortgages, to trash their traditional lending standards. And that's not
true.
Created the housing bubble.
That's simply not true.
Well, you can read Gretchen Morgan.
You're talking about the Community Reinvestment Act. I know you guys use this all the time as a talking point.
The Community Reinvestment Act. That Community Reinvestment Act was passed under Carter. It was Clinton that vastly expanded the regulation, that turned it into a weapon to actually loot the banks.
There were no laws forcing banks to loan to anybody. Any bank could turn anybody down for any reason except their race. And if they could find that person was not able to pay back the loan, that was plenty of reason to say no.
Have you ever heard of disparate impact? Disparate impact is it's the impact of your policy. So if you turn down more low-income people or minorities than others, for whatever reason, it's a disparate impact, and they were.
Well, those are two different things. The banks could always turn down low-income people.
No, if it has a disparate impact racially, they were being sued by Janet Reno at the Justice Department. They were being sued by HUD, and they were looted as a result. And they all thought that they could survive.
Peter, I'm not buying it. We got robbed by the banks. Those rules are still in place. Peter Ferrara, theccpp.org.